Close your eyes for a second. Imagine you have a crisp $100 bill in your hand. What if I told you that this small amount could be the start of something big? No, this isn't a get-rich-quick scheme. This is about real investments, the kind that have built fortunes over time. 4 years ago, I took $100 and put it into 5 different investments: stocks, real estate, crypto, gold, and index funds. And today, I'm revealing exactly which one made the most money. Will it be the explosive world of crypto, the steady reliability of index funds, or maybe the timeless power of gold? The results might shock you. So sit back, listen closely, and let's dive into the world of smart investing. First up, individual stocks. Imagine this. You see another headline about someone making millions in the stock market. You start thinking, what if that could be you? What if you could own a piece of companies like Apple, Microsoft, or Tesla? Every time people buy their products, you make money too. Sounds exciting, right? But here's the catch. Stocks aren't just about guessing which company will go up. If you want to win, you need a strategy. You need to understand a company's financials, track market trends, and know when to buy or sell. The risk? It's high. One day, your stock is up. The next, it crashes. If you put everything into the wrong company, you could lose it all. 4 years ago, I put $100 into individual stocks. Today, it's worth just $67, a 32% loss. But if I had picked Apple, that same investment would be worth $170. Microsoft? $188. Nvidia? $908. That's the reality of stock investing. It's not gambling. It's research, patience, and picking the right companies. If you get it right, the rewards can be life-changing. But if you want something safer, there's another way. Up next, how to invest in real estate without buying property. Stay tuned. Next, real estate investment trusts, REITs. You want to invest in real estate, but don't have thousands of dollars? No problem. Meet REITs. Real estate investment trusts let you invest in properties without actually buying one. Think of it like owning a tiny piece of an apartment building, a shopping mall, or even a hotel, without the hassle of dealing with tenants or maintenance. The learning curve? Moderate. It's much easier than buying physical property, but you still need to research the types of properties a REIT owns and how well they're performing. Passive income. This is where REITs shine. By law, they must pay out at least 90% of their profits as dividends. That means, as long as the properties generate income, you get paid, without lifting a finger. Risk level? Medium. REITs are more stable than individual stocks because they spread investments across multiple properties. But they're still affected by the real estate market. If property values drop or tenants stop paying rent, your returns can take a hit. So how did my investment perform? I put in $100. Today, it's worth $98.59. But with dividends included, I'm actually up 10.52%. Not bad for a passive income stream, right? But is it the best option? Let's keep going and find out. Now, crypto, the wild ride. What if I told you my best performing investment was something most people still don't fully understand? Yep, crypto. Bitcoin, Ethereum, digital money that isn't controlled by any bank or government. Some people say it's the future of finance. Others say it's pure speculation. But one thing's for sure, crypto has made some people insanely rich and wiped out others overnight. The learning curve? Moderate. You'll need to understand how wallets work, how to trade on exchanges, and what blockchain technology actually does. Passive income. It's possible. You can earn by staking or lending your crypto, but these methods come with their own risks. Risk level? Extremely high. Prices can skyrocket, but they can also drop 90% in a flash. The market is unpredictable, and if you're not careful, you could lose everything. So how did my investment perform? I put in $100, and today, it's worth $652.24. That's a 552% return. Sounds amazing, right? But let's be real. This is not typical. Most cryptocurrencies don't see gains like this. Many crash and never recover. Crypto is a high-risk, high-reward game. If you're thinking about jumping in, be prepared for the ride, because it's a wild one. But what about something more stable? Let's talk about gold, the original store of wealth. Gold, the safe haven. Gold has been a symbol of wealth for thousands of years. But is it still a good investment today? For centuries, people have trusted gold to store value. Wars, economic crashes, inflation, gold has survived it all. But in a world of stocks, crypto, and real estate, does it still make sense to invest in this ancient asset? The learning curve? Low. You don't need a finance degree to buy gold. Whether it's coins, bars, or gold ETFs, getting started is simple. Passive income? None. Gold doesn't pay dividends, interest, or rent. It just sits there. The only way to make money is if its price goes up. Risk level? Medium. Gold is stable, especially during economic downturns, but it won't make you rich overnight. While stocks and crypto can surge in value, gold moves much slower. So how did my investment do? I put in $100, and today, it's worth $140.10. A solid 40% increase. Gold is great for protecting wealth, but not necessarily for growing it. If you want steady, long-term growth, there might be a better option. And that brings us to index funds. Finally, index funds, the lazy investor's dream. What if I told you there's an investment where you don't have to pick stocks, check charts, or time the market? No stress, no constant watching. Just set it and forget it. Welcome to the world of index funds, one of the simplest, most effective ways to grow your wealth over time. The learning curve? Low. You don't need to analyze financial statements or predict market movements. Just invest, sit back, and let the market do the work. Passive income? Moderate. Some index funds pay dividends, but the real power comes from long-term growth. Historically, markets tend to rise over time, meaning your money steadily grows along with them. Risk level? Low. Instead of betting on a single company, you're investing in hundreds, spreading out the risk and increasing your chances of steady returns. And the result? I put in $100, and today, it's worth $179.57. That's a 79.5% return. This is why index funds are my favorite investment. They're simple, low cost, and they deliver. If you're looking for a stress-free way to grow your wealth, this might be the best place to start. But remember, no investment is risk-free. The key is to start early, stay consistent, and let time do the heavy lifting. So which investment wins? Well, that depends on you. If you want stability, index funds or REITs are your best bet. They're steady, reliable, and perfect for long-term growth. If you're chasing massive growth, crypto can deliver, but be prepared for the risks. Prices can soar and crash just as fast. If you want to protect wealth, gold is your answer. It won't make you rich, but it will hold its value through economic ups and downs. And if you're looking for excitement, individual stocks can be rewarding if you choose wisely and play the long game. But here's the biggest lesson. Time is your best friend. Even a small investment, just $100, can grow into something big if you start early and stay consistent. So, what are you going to invest in? Want to see the easiest way to make money online? Click here for the next video.